Hello and welcome at Value Investing, where we try to estimate the intrinsic value of different stocks. Today we will look at PayPal, which is losing its edge according to Seeking Alpha. We know that PayPal is a financial service which provides similar functionality to Apple Pay, Shopify, Stripe, Google Pay, and other financial services. Over the COVID pandemic, PayPal got a lot of momentum, increasing their value even to €260. However, over the last 5 years, the stock is down around 20%, and we will try to estimate what they are actually worth, despite having big competitors currently with Apple and Google. So I have built a spreadsheet which tries to estimate the intrinsic value of PayPal. And I usually use 4 different valuation models. However, later we will see that I have to skip one of them as PayPal is not paying any dividend to their shareholders. We can see that PayPal increased their earnings per share over the years pretty much up until 2020 when they lost momentum, and from there on their earnings per share growth stopped and it's rather on the declining trend. Let's hop right into the first valuation, which is Graham's valuation. We will use the revised formula from Graham, and I have plugged in all the values as you can see here, and this brings us to an intrinsic value of $49. Let's go to the next valuation model. The multiples valuation compares PayPal to different other companies which offer similar services. For this, I had to pick Visa and MasterCard. However, Stripe or Apple Pay or Google Pay would be a better fit. However, it is not really fair to compare PayPal with Google or Apple. So therefore, we will compare it to Visa and MasterCard. And according to their price earnings multiple, which is around 30 to 40, get an intrinsic value for PayPal at around $80. The discounted cash flow analysis for PayPal is assuming a projected growth of around 10%, which we can see that the free cash flow growth is on average over the last few years 24%. So I have decreased the growth rate projection to 10% to not overestimate the value, even though with these values and a discount rate of 8.5%, we come to an intrinsic value of $118. The dividend discount model does not really make sense for this company as it is not really paying out any dividend. However, there is one more thing I usually like to look out for, and this is the outstanding shares. And if we look out for the outstanding shares for PayPal, we can see that their outstanding shares increased over time up until 2016, and then they started to buy back a lot of shares as a compensation for their non-paying dividend strategy, which basically should increase the value of the stock if the stock is in a healthy position. So this brings us back to our output tab, where we average all of our valuations and try to find the intrinsic value, which according to our calculation brings an intrinsic value of $82. If we apply a 20% margin of safety to this $82, we get an acceptable buy price of around $65, and this would make PayPal currently a buy if you believe it can recover in the long run. This is of course no investment advice, and I would like to know what you think about PayPal in the long run in the comments down below.